Welcome back to Today Assets Report, the channel where we break down everything happening in the world of finance, crypto, and the future of money. And folks, let me tell you right now, today's report is one that you absolutely cannot afford to miss. We are talking about a seismic shift that is happening in real time, right before our very eyes. The big banks, the same institutions that spent years trying to bury crypto, trying to discredit it, trying to regulate it into the ground, those very same banks are now sprinting toward crypto like their entire business depends on it. And honestly, it does, because what we are witnessing right now is not just a trend. It is a full-scale financial revolution, and the names jumping in are not small players. We're talking Goldman Sachs, Morgan Stanley, Citi, PNC, Barclays, Bank of America, the absolute titans of traditional finance. So buckle up, because this report is going to change how you see the market and, more importantly, how you see where we're headed. Let's start from the very beginning of this story because context is everything here. Back in early January, Bank of America made a move that genuinely shocked a lot of people in the financial world. The bank officially began promoting Bitcoin and crypto investments to its clients. Not just mentioning it, actively recommending that clients allocate up to 4% of their portfolio into crypto assets. Now, if you've been in this space for any amount of time, you know how massive that is. Bank of America is one of the largest financial institutions on the planet. This is a bank with trillions of dollars in assets under management, millions of clients, and decades of institutional credibility. And they just told their clients to put money into crypto. That is not a small thing. That is a declaration. The banks are here. That's the statement that needs to be heard loud and clear, because for years, and I mean years and years and years, these same banks were the loudest critics of the entire crypto space. Think about it for a second. For the better part of the last decade, the narrative from Wall Street was that Bitcoin was a scam, that crypto was for criminals, that it had no real value, no real future, and that the whole thing was going to collapse. They said it over and over again, and yet here we are. Not only did crypto survive every single attempt to kill it, but it came back stronger each time. The market kept growing, the technology kept developing, the user base kept expanding, and eventually these massive institutions had no choice but to face the truth. They cannot stop this. They tried their absolute hardest, and they failed. And now, instead of fighting it, they're joining it. And when you have institutions of this size and credibility joining the space, that sends a signal to the entire global financial community that crypto is not just here, it is the future. Now let's talk about what's happening at the research level, because this is where you can really see how serious these banks are getting. Frank Shapiro, the head of content and special projects at global crypto trading firm GSR, recently put out information confirming that both Goldman Sachs and Jefferies are actively hiring equity research associates specifically to cover crypto and digital assets. Goldman Sachs, one of the most prestigious investment banks in the entire world, is building out a dedicated team to study and report on the crypto market. That is not something you do casually. That is not something you do if you're still on the fence about whether this space has a future. You hire a research team because you are preparing to go deep. You are preparing to give your institutional clients the kind of detailed, data-driven insights they need to invest with confidence. Goldman building a crypto research division is Goldman saying without any ambiguity that digital assets are now a permanent fixture of the financial landscape. And it doesn't stop there, not even close. One of the most eye-opening stories to come out recently involves PNC Bank, which is a 180-year-old financial institution. That sink in for a moment. 180 years of banking history, and PNC just became the first major U.S. bank to offer direct spot Bitcoin trading and custody services to its private banking clients through a strategic partnership with Coinbase. The chief investment officer of PNC Bank went on record and said that the institutional benefits of heading down this path are absolutely massive, and that it was critical for them to take that step in order to start learning and interacting with this completely new and different asset class. This is not some startup. This is not some fringe financial firm. This is PNC Bank, a deeply conservative, deeply established institution, saying that partnering with Coinbase and creating access to Bitcoin for their clients was not just smart, it was necessary. What makes the PNC story even more compelling is what it reveals about where client demand is heading. The CIO acknowledged that client demand might start off slow, And that's totally understandable because a lot of traditional banking clients are still learning about crypto. But here's the thing, PNC didn't wait for the demand to explode before making the move. They moved proactively. They looked at the trajectory of this space. They assessed the strategic opportunity. And they said, we need to be positioned now. That is exactly the kind of institutional thinking that signals a true long-term shift. When banks start moving before their clients are even asking for it, that tells you everything about how they see the future playing out. They are not reacting, they are anticipating, and they are building the infrastructure today so that they are ready for the wave that is coming tomorrow. Now let's talk about something that really drove the point home on a global stage. And that is what Coinbase CEO Brian Armstrong revealed at Davos at the end of January. Armstrong shared that when he met with the world's largest banks at that gathering, the vast majority of them expressed that they are actively integrating crypto into their operations. He described meeting with one of the top 10 global banks in the world, and the CEO of that bank told him directly, and this is the kind of quote that should stop you in your tracks, that crypto is his #1 priority, that it is existential for their institution, that they are going all in. Now think about the weight of those words. A top 10 global bank CEO telling the head of Coinbase that crypto is existential for their business. That is not a casual conversation. That is a confession that the entire financial world is watching this space very, very carefully, and the ones who do not adapt are going to be left behind. Brian Armstrong framed it beautifully when he compared what's happening now to the early days of the internet. Think about the companies that saw the internet coming and embraced it early. Amazon, Google, Netflix. And then think about the companies that buried their heads in the sand and pretended the internet was just a fad. Blockbuster, Borders, Kodak. The banks that are moving now on crypto are the ones that are choosing to be Amazon. The ones still sitting on the sidelines, still skeptical, still dismissive. They are choosing to be Blockbuster. And we all know how that story ends. Armstrong also pointed out that something like 500 million people have now used crypto globally, that Bitcoin was the best performing asset class of the last decade, and that the largest financial institutions on the planet are now integrating this technology. At this point, he said, it is simply foolish to pretend that this isn't happening. Let's keep going through the list of names because this is where it really gets staggering. Barclays, one of the UK's most iconic banking giants, was reported by Bloomberg on February 27th to be actively looking for a technology provider for a new blockchain settlement engine. Think about what that means. Barclays is building blockchain infrastructure into its core settlement operations. They are not just buying some Bitcoin ETF as a side investment. They are integrating blockchain technology into the fundamental mechanics of how they move money and settle transactions. And Bloomberg specifically noted that Barclays would be rivaling JP Morgan and others in using decentralized technology for core banking services. The race is now officially on between these institutions, and the one who builds the best blockchain infrastructure wins the future of banking. It is that simple. And every single major bank knows it. Then we have Citi, which announced plans to launch Bitcoin custody and banking services this year. Citi is one of the largest global banks in existence, with operations spanning nearly every country on the planet. And they are building Bitcoin custody into their banking framework. At the same time, Morgan Stanley, another absolute giant, is also expanding its Bitcoin and crypto custody, trading, and tokenization efforts. These two institutions together manage an almost incomprehensible amount of wealth, and both of them, in essentially the same breath, announced they are going all in on crypto. When you see Citi and Morgan Stanley making these moves simultaneously, it confirms beyond any reasonable doubt that this is not a fringe movement anymore. This is the mainstream financial system restructuring itself around digital assets. The Morgan Stanley story in particular is worth spending some extra time on because the details are remarkable. Amy Oldenburg, a senior figure at Morgan Stanley, went on record to confirm that the bank has concrete plans to offer Bitcoin trading, lending, yield generation, and custody services in the future. She explained that Morgan Stanley is not just going to rent the technology from a third-party provider. They are going to build their own native custody and exchange solution internally. And the reason she gave for that is deeply telling. She said that Morgan Stanley's clients trust the Morgan Stanley brand to be no fail. That when you custody your assets with Morgan Stanley, you have legal custody with one of the most respected financial brands on the planet overseeing those assets on your behalf. That level of institutional credibility entering the crypto custody space is genuinely transformative. What's also fascinating about what Oldenburg shared is the acknowledgement of DeFi lending. She mentioned being somewhat surprised by how much momentum there is around decentralized finance lending this year, saying that it keeps coming up again and again in discussions. Think about that for a moment. Morgan Stanley executives are sitting in rooms talking about DeFi. The world's most traditional wealth management institution is discussing decentralized finance protocols as a legitimate product category. That crossover between the legacy financial world and the decentralized financial world is happening faster than most people realize, and the people in those conversations are the ones who are going to shape how it all unfolds. When you connect the dots between Morgan Stanley's $8 trillion in assets on platform and the fact that many of their current clients hold crypto off-platform, the business opportunity is massive. They are building the infrastructure to bring all of that on-chain. Now, let's just talk about Ripple for a moment, because this story cannot be told without acknowledging the company that was pioneering the bank-crypto relationship long before it was fashionable. Back in December, Ripple partnered with Amina Bank, making it the first European bank to go live with Ripple payments. But more broadly, Ripple has been doing the work of building relationships with the banking world for years, back when most of the industry was still hostile to crypto, back when banks were actively lobbying against digital assets. Ripple was sitting at the table with financial institutions and building payment infrastructure. And now, as all of these banks flood into the space, Ripple's head start becomes even more significant. The groundwork that was laid years ago is now the foundation on which this entire institutional wave is being built. And then there's the SWIFT story, which might be the most eye-opening piece of all of this. SWIFT, the global interbank messaging system that underpins how trillions of dollars move across borders every single day, is actively working with the global banking industry to push forward collaboration around a blockchain-based ledger. Major banks, including ANZ, are working as part of a global group to build a blockchain-based ledger for seamless and secure movement of value across borders. Now, what this tells us is that even the most deeply entrenched legacy infrastructure in global finance is not just watching blockchain. They are building on it. They are integrating it. And as more and more of these systems go on-chain, the need for a neutral bridge currency, something like XRP, becomes not just useful, but essential. Because in a world where every bank is building its own blockchain system, you still need something that connects all of those systems together. Let's zoom out and look at the bigger picture here, because what we're watching in 2026 is something that is genuinely historic. The line between traditional finance and decentralized finance, the line between TradFi and DeFi, is not just blurring, it is disappearing. The institutions that were once on opposite sides of that line are now converging at a pace that most retail investors simply haven't registered yet. And that creates one of the most significant opportunities in modern financial history. Institutional players on Wall Street are flooding on-chain, while a lot of retail investors are stepping back because the price action looks uncertain, because the news cycle feels heavy, because uncertainty breeds fear. But here's what the smart money knows. The adoption phase always precedes the utilization phase. You build the infrastructure first, and then you use it. Right now, the world's biggest banks are building the infrastructure. And when the utilization phase kicks in, like when all of that institutional capital and all of those clients and all of that technology starts running on crypto rails, the scale of what comes next is going to dwarf everything we've seen before. Stay locked in to Today Assets Report, because we will be right here every step of the way. Let's go.